We've got a lot of things coming up that could shift the balance in the market, right? So we've got the inauguration, we've got a transition in power, we've got lots of things that could create some uncertainty in the market. And as you know, the market doesn't like uncertainty. We had a monstrous 2020. We've got 2021 coming. Are we going to continue the run? Is it going to continue to rip higher? Or is it going to cool off? Or is it going to roll over? Let's find out. My name is Brian Cannon, and welcome to Markets in 5. 2 weeks ago, I went through several indicators that we watch, and this week I wanted to kind of dive into a little bit more on support and resistance, because that's a very, very important part of technical trading. So in this chart, this is the S&P 500, and you can see the green top line is the very peak of the market, and so that's what we call resistance. The next several blue lines are levels of support that we've identified that we feel like really need to hold up in order for this trend to continue. And then finally, we've got this red line here, which marks an upward trend that we're watching very closely as well. So over here, you can see the various levels of support and what the percentage drop would be. So for instance, on this from the top green line to the first blue line would be about 1.9% down. The next blue line, 3.4%. And finally, the last level of support that we really want to see holding up to make sure that this short-term kind of trend, if you will, is in effect, is negative 6.2% from the top. Another level of support is the 50-day moving average, which is the red line. So that would be an in-between level of support that we would also watch very closely. So the question is, will the trend line hold? Will we break the 20-day moving average? And, are we going to bounce and continue the ride up? That's what we're going to be watching for. And those are the signals we're going to watch when making investment decisions. This is an analysis, a correlation analysis between the VIX, which is the volatility index. It's a measure of fear in the market. In comparing that against the S&P 500. So the top chart up there is the VIX, the volatility index. The bottom chart there is the S&P 500. And the middle chart there with all the circles is a correlation analysis. You can see here the red circles, the drops. So we just had a highly correlated VIX and S&P 500. We are holding this line. We haven't had a major drop yet. So question is, will it hold? In this final chart, this is a put call ratio analysis, right? So when people are buying puts, they're very fearful in the market. They're very scared. It's a way to hedge and protect your portfolio. However, when you get to extreme levels, that's usually a sign that it's time to start buying. And conversely, on the other side, when extreme levels of optimism come into play, oftentimes you want to be very cautious in your investing, just because it can turn quick. And so you want to watch these levels. So for instance, you can see here, these levels of optimism have stayed extremely strong. So I don't think it would take a whole lot to reverse this and send it back up to either normal modes. I don't know if it'll go to extreme levels. Again, I do think that we're in a long-term uptrend. I do think that, that we've got a lot of upside to go, but that doesn't mean we're not going to have fits and starts and pullbacks and volatility and risk. So we want to just pay attention to a lot of these various indicators to help us determine, is the market going to cool off, or is it going to roll over, or are we still smooth sailing? Let's go and put your foot on the risk. These are some of the indicators that we're watching to help us make better investment decisions. If we can be of service to you, or if you have any questions, or if you want to share this video, by all means, feel free. And we'll see you back in 2 weeks. My name is Brian Cannon, and that was your Markets in 5.